please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, if the opening game is any indication, we are in for a really good World Cup. 5-0 for Russia, of course. So perfect start for the host nation. But let's see how things move from here on the Football World Cup front. For the equity markets, of course, things of late have become a bit volatile. And there's a good chance that some more volatility could be the order of the day today. This is Bazaar Morning Call. I'm Anuj. With me, Sonia and Surabhi. Good morning.
Hi, good morning.
Hi, morning. Good morning, Anuj.
It was a good game, but the opening ceremony was such a damn squib, right? I mean, they could have done better than that for sure.
You know, after Africa and Shakira, I think nothing can ever match up to that. Nothing. And for that song was also so mesmerizing. So I think whatever World Cup organizers do, you'll keep going back to
I take
Africa.
your point, Anuj. I mean, that was really the pinnacle. And yes, yesterday I was like, what, is this really over? But having said that, I was like school time nostalgia because you're listening to old songs. Though of course, I mean, it could have been more grand, I guess. But anyway, the games have begun. It's a beautiful game, so I'm sure there'll be lots of action going forward.
Absolutely, and it's also Eid today, so to all our viewers, our followers, etc., Eid Mubarak. We of course we have a market that is volatile, but isn't the market also within a very narrow range, Anuj? I mean, not much is happening. If you talk about locally, globally also, if you look at crude, you look at the global markets, everything seems to be in limbo right now. You get a sense that that could be the case with our markets as well?
Yeah, so yeah, what is really interesting and important is that we are going through a phase where emerging markets are underperforming. Yes. And there's a bit of a currency scare happening right now. Now, not perhaps in the Asian currencies, mostly in the Latin American world and a couple of other countries. But for us also, there have been some warning signs. The market does not have triggers right now to break out or break down. It's in a range. And as of now, for today, if you're just a day trader, your reference points are so clear because yesterday market ended right in the middle of that. Yesterday's high and yesterday's low. What was the high yesterday? 10,834, and the low yesterday 10,773 on the Nifty. You want to see if either of these are being taken out convincingly. If not, then that's a scalping trade for you. Similarly, on the Bank Nifty, yesterday's high of 26,623, yesterday's low of 26,500. Thereabout, we ended right in between. You want to see these two levels purely from a day trading point of view, because right now the market's not giving you any kind of follow through. But your reference points are so clear because yesterday market ended right in the middle of that. Yesterday's high and yesterday's low. What was the high yesterday? 10,834, and the low yesterday 10,773 on the Nifty. You want to see if either of these are being taken out convincingly. If not, then that's a scalping trade for you. Similarly, on the Bank Nifty, yesterday's high of 26,623, yesterday's low of 26,500. Thereabout, we ended right in between. You want to see these two levels purely from a day trading point of view, because right now the market's not giving you any kind of follow through. But if you are a positional trader, in that case, the market's giving you a couple of signs about the future move. One, the FI selling has intensified in cash. Of course, they've been selling a lot, but in index futures. And we have now 2 weeks to go for expiry. So that way, I think it's an important internal. And the other is that the market has failed to take out the previous high convincingly. And in that case, if it's a ranging market with no triggers, it's failed to take out the upper end of the range. Now, perhaps there's a good chance that it tests the lower end of the range, which is somewhere around 10,650, which is the 200-day moving average on the Nifty. So, a day trader should approach the market with yesterday's data points in reference, and a positional trader, my sense is, first signs of this market turning away from being buy on dips to a sell on rally. I think that could play out.
I take your point about this emerging market scare because it is real. I mean, if you look at what happened with the currency yesterday, the Argentinian peso, the Brazilian real, there was a huge slide. I mean, the Argentinian peso is now at a new low. The Brazilian real fell, for the 4th day in a row. And emerging markets in general have not done well this year. I mean, the index itself is down 2.5%. So for our own markets, it could perhaps be another scare.
Yeah, exactly. But the only problem is MSCI emerging market has all these countries like Brazil and others. For us, if you see the MSCI Asia X Japan, that is still in the green, but we are underperforming that as well. So we are what, 40th or 41st out of 50. Now if you were an optimist, you would say that so we have already underperformed so much, now we should rally, right? Things don't work out like that, especially because we've had a fantastic 2017. 2018 is really going to be tough here.
Okay, well, I take your point about everything being in a limbo. That's exactly how it's playing out, Sonia. In fact, we have mixed sort of views across the Asian universe. As of now, the SGX Nifty is slightly lower. The saving grace for equities overnight obviously was that the ECB went as per script, and they have guided that there's no jerky sort of rate hike coming anytime soon. So that kind of helped sentiment on Wall Street and across the European universe. But Anuj, to talk about a point back home and the leadership of whatever little rally we are getting, or this trading range that we are getting. The pharma index up almost 6% this week.
Yes.
Individual stocks, large cap pharma stocks, 9, 10, 11% up this week. So can one now say that this is like a convincing rally, or maybe even a convincing bottom being formed?
Yeah, this is a convincing rally, Surabhi. The issue here is, if you see the chart of the pharma index as well, it's ended its bear market. It's no longer a bear market pullback. If it was a bear market pullback, by now it would have been over. This is 1 month chart. I just want to pull out a slightly longer chart. Let's say a 6-month or 1 year chart. If you see the 6-month or 1 year chart of Nifty Pharma, what you will see is that it's sort of, there it is, that's making a bit of a W formation, and it's taking out the last high. We're nearly there. And that is also the 200-day moving average. You just want to see if that is being taken out, because if that is the case, that opens the door for another 10% move. Now, the issue is, how do you approach the pharma index from here, because you are at 200-day moving average? It's topped out twice at current levels, so that risk always remains. But the way stocks are being bought and the way delivery volumes are picking up, this is more than a flash in the pan. The top-down pharma move may be done now. For last few days, you've seen everything move. Sun Pharma, Aurobindo, Dr. Reddy's, Lupin, Cipla. In the broader market, the Ajantas of the world, Granules of the world, they have also moved. What would now happen is a bottom-up move. And in that sense, you'll have to really pick your individual stocks and, take call accordingly, because buying everything in pharma from here on will not work. You'll have to choose your stocks.
Okay, and of course there is good news. It's raining good news in the pharma space. First it was Sun Pharma and Halol. Now it's Dr. Reddy's with Suboxone. We'll of course talk about that in greater detail, but let's kickstart the show. Let's tell you what our wise experts have to say as we head into trade this Friday morning. Chris Wood of CLSA believes that one risk for Indian equities is that high net worth investors sell stocks to purchase real estate, as evidence grows that the residential property cycle has turned up. He believes this would be a negative caused by a positive. Greed and Fear again recommends investors to buy into the Indian property sector if they have not done already, as affordability remains at the best level in 15 years, while developers' pre-sales are rising.
Okay, I still can't afford a house in Mumbai, so I don't know about that. Anyway, let's move on. We'll get some money market views. Bhaskar Panda of HDFC Bank says global interest rate cycle has turned upwards. He says while some central banks like US Fed are already in the hike cycle, other major central banks like ECB and BOJ are keeping their options open. Meanwhile, he adds that dollar index has moved up post the ECB announcement, which would bring pressure on emerging market currencies, including the USD INR. He expects the pair to trade in a higher range between 67.70 to 67.90 today.
All right, he also speaks about the bond market. He expects the 10-year benchmark bond yield to remain in a range of 7.93 to 7.97% today.
Okay, those are the local money market cues. Let's now move on and take a look at what the world is up to. Let's go across to Manglam.
Well, the world is by and large mixed, Surabhi. So the Nasdaq yesterday, that one closed at a record high despite the Dow being absolutely flattish to mild negative in close in yesterday's trading session. So what led the Nasdaq to a record high? Well, Facebook, that one ended at a record high. The other gains were led by the likes of Google parent Alphabet as well as Netflix. We call them the FANG stocks. However, keep in mind the media space, that one is abuzz. We were talking about 21st century assets being bid for by both Comcast as well as Disney. Comcast's bid has outbid or has upped Disney's bid, and all these stocks were in focus, gaining anywhere between 1.5% to 5%. Consumer spending in the US has improved. However, the 10-year bond yield has slumped below that 3%, below that 2.95%, around that 2.93%. Watch out for that. The consumer spending, yes, that one has improved. US retail sales at 0.8% as against expectations of 0.4%. Let's move across the Atlantic then. The ECB dovish tapering has spurred sentiment out there. They've also indicated that interest rates now would not budge for at least a year, so watch out for that one. The DAX as well as the CAC, both of them were up 1.5%. Auto stocks in the European region gained, so the likes of Volkswagen as well as Rolls-Royce were up anywhere between 2.5% to 6.5%. Sentiment on the football field not reflecting in the emerging markets. The Russian index was down in yesterday's trading session. The Brazilian index was lower as well. The Brazilian real, remember, is at a 13-month low. If you take a look at the Asian markets, by and large mixed. The Nikkei as well as the Hang Seng are are outperforming. Shanghai is at a 52-week low. The SGX Nifty indicates a mildly red start. So let's see where we go.
Okay, Mangalam, thanks a lot for that. Well, 2018, of course, has been a tough year for Indian equities after a really good 2017. But that should not surprise our next guest, Adrian Mowat. In fact, he had been making this point all through the last half of second half of 2017. Adrian, good morning. So, you had warned us that 2018 could be a tough year for India, and it's playing out like that. We are underperforming, of course, the developed markets, but even the emerging markets. You reckon there's more to go on the underperforming side?
Look, I actually think we're probably moving into sort of buying territory quite soon in the emerging world. I mean, your introduction was just sort of highlighting a lot of the bearish statistics, many markets at 52 weeks lows. Investors are quite conscious about the weakness we've seen in EM currencies. We've had some clear indication from central banks, whether that be the Fed or the ECB, maybe we'll get something out of the BOJ as well this week, that rates will continue to rise. But remember that they're doing that because economies are quite strong. I think within the emerging market space, you've had this large divergence in performance with those countries that are more vulnerable to higher rates, with current account deficits, higher interest rates, suffering the most. India is a little bit of an underperformer, but I think it's really more middle of the pack. India doesn't have significant structural issues that you might find in a place like, Brazil, Indonesia, Turkey, etc., where you've had the poorer performance. And I think the pessimism around India is probably a little bit overdone now. Within the market, there's been a big dispersion in performance in India, with a few of the tech companies doing well, some of the consumer staples, the more defensive companies doing well, and cyclicals generally struggling. And perhaps that sort of pessimism starts to bring us into a bit of a buying opportunity in an economy that maybe is not as robust as it has been for the last couple of years, but is still a pretty strong growing economy.
Okay. Adrian, hi, good morning. Always a pleasure speaking with you. So what does your pecking order look like now? You started by saying that we're getting into buying territory for the emerging market basket as a whole. But if you can rate them for us, where does India feature on your list?
Well, I actually would argue India's moving up the list. So I am reluctant to be buying into emerging market basket as a whole. I do think there's still a very wide range of fundamentals there. Within Brazil, we have challenges particularly around the politics and their ability to pursue fiscal reform, which they need to do. I think places like Turkey continue to be challenged with the ECB exiting their QE program and the politics still being more disturbed in Turkey. Whereas I think the story with India is that India has been drawn a bit lower because of the emerging market story, and perhaps the fundamentals there on a medium-term basis still remain pretty decent. I was intrigued by what Chris was saying. Chris Woods was saying about the property market. The property market in India has been fundamentally weak. Prices falling. That's now recovering. I think that's actually quite a good sign, for the medium-term demand within the economy, both for consumer demand as well as investment demand.
Adrian, morning. So 3 key reasons that the bear side, why the Indian market perhaps is not able to push through fresh highs. One is earnings recovery being, lackluster, so to speak. Second is oil, and the third is politics, because we're running into elections next year. How do you sort of stack up these three, and do you think that fresh highs in India are still possible?
Yeah, so, well, we're nowhere near fresh highs, right, in India. But look, we're talking here about capital markets. So if we're openly discussing those 3 bear points, one has to assume that they are partially, if not completely, discounted in markets. And as we look forward to think about how 2019 is going to feel, perhaps it feels a little bit less bearish, a little bit less anxiety than we're currently experiencing in markets. So often the bearish twist ultimately is the bullish twist. Warren Buffett always says, you know, you make money out of bear markets, not out of bull markets. And I think now is the time to start to look at stocks on a slightly more optimistic basis. And remember, this is me really sort of changing my view. You know, I've been pretty cautious throughout much of 2018. And I think now is the time to look into some of these more underperforming sectors, these more cyclical sectors, you know, whether that's real estate or whether that's some other infrastructure plays on a more optimistic basis than the market currently is.
Okay, you know, that's a very interesting point that you made, Adrian, because while at index level, we might be closer to all-time highs, but at portfolio levels, with the kind of fall that we have seen in broader market in India, a lot of people believe that we are perhaps closer to 9,500 or 9,600 around that. But you know, you spoke about buying beaten down stocks. We have seen a lot of buying in Indian pharma stocks. Healthcare stocks have been doing well. Is that a space that you think is giving good value now? Adrian, can you hear me?
Oops,
okay, I think
we
have lost that
line,
connection.
yeah.
So we'll try to repatch.
Yes, we will. For now, let's do one thing. Let's just get a quick look at what's happening in the Asian markets, because it has not been so good this morning. It's slightly sideways for some of them. Kospi is down in the red. But here's a quick programming reminder. We have a special series ongoing, Hunting for Value. Remember, we will focus today on a company whose stock has fallen almost 40% this year. But analysts across the street are betting on the restructuring of its loss-making units. Is this street ignoring the company's improving operations? Is the stock a value pick or a trap? Do stay tuned in to catch the stock and its value metrics at 9:50 a.m. only on CNBC TV18. Hi, welcome back to Bazaar Morning Call. We are analyzing all the data points this morning, and it's not looking that good. Across the board, there's been a slide in emerging market currencies. The Asian markets are subdued. By the way, some comments coming in from Bank of Japan. They continue to keep their monetary policy steady. They've been doing that for a very, very long time. But our research team is here to give you the list of top 10 stocks to watch as we head into trade this morning. So let's welcome all of them. A lot of large caps in focus this morning. Anuj, what are you looking at?
So 2 large caps. But, you know, I make a point here. The market is going to be volatile today. It's not going to be just, just falling in one way. I think there will be periods of buying as well, Sonia. Natco Pharma, for last many days I've been pointing out all the pharma names where there's been some buying. I think Natco is the one which bounced from 20 and 50-day moving average. What goes in its favor also is its valuations, trades at some 16 times 1 year forward. So that would be one stock in focus. The curious stock for me really is HCL Tech. It was one of the big outperformers of last year. Then after the quarterly numbers, you saw that big decline. But now for last 2 times, it's taken support at 200-day moving average. And yesterday there was strong delivery buying in HCL Tech. So it's not breaking 900, 910. And normally strong stocks, when they bounce back from 200-day moving average and the sector is good, they normally go back to their highs. Will be interesting to see if that's the case with HCL Tech.
Okay, so those 2 on our radar. Speaking of tech, the big boy, TCS, should be announcing details of its buyback program. Rima, so that's definitely going to be in the news?
Yes, definitely. And we should expect the buyback announcement in market hours, because today the company will be also having its annual general meeting, which starts at 3:30. So the management will shift their base to the AGM post-markets. So we should expect them to conclude the board meeting in market hours. We understand it could be around 2 o'clock. So if they do a 10% buyback, which means 10% of the paid-up capital plus free reserves, then the buyback size can be 8,500 crore. If they take a shareholder approval, then the quantum of buyback can be 25% of the paid-up capital and free reserves, which would push up the overall buyback size to about 21,000 crore rupees, or 3.1% of the outstanding equity. Promoter holding is at 72%. We should expect them to participate in the buyback, considering the cash requirements of its group companies. This will be the second buyback from the company. They did a buyback last year, which got concluded in May. So the total buyback size was 16,000 crore rupees, or 2.8% of the outstanding equity at that point of time. And this buyback is in line with the company's stated policy of returning 80 to 100% of their free cash flow. So in focus today.
Okay, all right. That's the word coming in on TCS. But Dr. Reddy's will be in focus. It has got the approval to launch Subuxone. Now, this is, of course, not only important for Dr. Reddy's, but as we know, opioid deaths are rising at an epidemic level in the US. I was just reading, Ekta, that there are 100 deaths, more than 100 deaths per day because of overdose of opioids. But anyway, from a Dr. Reddy's perspective, how does it matter?
Well, it is actually important because it was declared by the Trump administration as a public health emergency all the way back in October. So yes, this is also a sort of politically motivated launch or approval from the US FDA. They really want to step on the gas when it comes to any sort of generic approval for a drug which deals with this particular crisis. Nonetheless, can't take away from the fact that it is a big positive for Dr. Reddy's. Market size is up around to $750 million. Depends how much competition they probably see in the market. For Dr. Reddy's, assumption is that they could make anywhere between 25 to even 60 rupees initially when there is no competition in the particular frame of this particular drug. But remember, it's an at-risk launch. There is a litigation ongoing in the US with regards to this, and Dr. Reddy, if they lose that litigation, then the damages could be 2 to 3 times. Again, it's important to note that it's a very politically important launch as well, and hence that could shape the future for Dr. Reddy's.
Okay. All right. Thanks, Ekta, very much for that. Let's move to Abhishek, who's been tracking the stake sale that we saw in ICICI Prudential yesterday. Promoters selling because of mandatory requirements. Abhishek?
Well, Surbi, ICICI Bank is looking to further pare down about 1.44 crore shares due to the oversubscription demand that it saw. So in total, they are looking to sell down about 3% at an average price of 392. This works out to close to 1,700 crore of revenue generation for ICICI Bank. And the Tier 1 ratio post a 20% tax if you cut down on the 1,700 crore can increase by 21 basis points. The book value can increase by about 2.1 rupees per share, and overall stake in ICICI Pru of ICICI Bank will come down to 51.88 versus 54.88. Now, another news report suggests that the directors of ICICI Bank are readying succession plan for MD and CEO post, and they have formed a nomination panel which will look into interested candidates and will suggest a name. Post the suggestion of name, the nomination panel will place it before the board. The board and RBI will have to approve the name. CNBC TV18 has not verified this report independently, but expect ICICI Bank to be in green today.
Okay, Abhishek, thanks a lot for that. So let's see how ICICI Bank reacts. Sonia, why are you watching what for CEAT?
Well, they had an analyst meet yesterday, and I must say that the commentary was really positive. Of course, we do know from the past that Anand Goenka has outlined, 3,000 crore investment plan, expansion plan for CEAT. But yesterday, they did give us some more details. They're looking to triple the truck, bus, and radial capacity. They're looking at doubling the passenger vehicle capacity. They're looking at a 50% rise in the two-wheeler, tire capacity. Now, two-wheeler is a new business for them, relatively new, and they're making big strides over there. They're also scaling up the highly profitable specialty tires export business, which has high margins. So let's see how that shapes up for them. A lot of brokerages are very bullish on CEAT. One of them, Macquarie, maintains an outperform. They have a target of 2,000 rupees on the stock.
Okay, and what about UPL, Sonal?
Well, DB has written on UPL. UPL has been an underperformer this year, down 10% year to date, and that is because of depreciation in the Brazilian real, and Brazil is the main market for the company. So now DB says that all the concerns related to depreciation of Brazilian real is overdone, and their tracker shows a 2% YOY appreciation in Brazilian real going forth, and they also expect company to maintain their guidance, in fact achieve constant currency revenue growth on the upper end, that is 12%, and they expect the company to do well in coming quarters. They are reiterating a buy with a target price of 890 and expect an EPS growth of 18% going forth.
Okay, all right. Thanks very much, Sonal, for that. Well, let's move across to Anisha, who's got a lot of other stocks on her radar as well. Anisha?
Hi, Surabhi. Good morning. Well, I'll start with Virenchi, where there is a good news that the company's expansion plan is getting commenced, and this one is in Hyderabad. So expect that stock to be in green. But what will not be in green is perhaps Vakrangri. Not only the results are weak and the profit has literally halved year on year in the quarter gone by. Interestingly, they're looking at changing the capital allocation policy, which raises question on the buyback plan that they had announced, as well as the dividend payout. So that might spook investors a bit. Talking about spooking the investors, that can be the case for Gati, Tati as well, because remember, for one of the subsidiaries, the auditors had come out with a modified opinion. Now, yesterday, the management came out and clarified to the exchanges and said that they do not have much to add on that, and that's why the modified opinion by the auditors. So that might not do anything to really assuage investor concerns. So that might see a downtick as well. Back to you.
Okay, so cancelling the proposed share buyback, Vakrangi. Let's see. Well, Vakrangi has actually been one of the big gainers in this last 1 or 2 weeks. So I'm guessing there could be some selling pressure today. But here's a quick recap of our top stocks. Expected to gain today are names like Natco Pharma, HCL Tech, TCS, ICICI Bank, CIAT, Dr. Reddy's, UPL, Virinchi, while stocks expected to be under pressure, Vakrangi and Kati. We'll take a quick break. Our technical experts will join in on the other side to talk about how to approach the last day of the trading week.
Welcome back. That's the SGX Nifty indicating that we'll have a start around or below the 10,800 mark. Not saying much because yesterday we ended at 10,808. Yesterday, both the Nifty and Bank Nifty futures slipped into a discount, which is interesting because we still have about 2 weeks to go for expiry. What does that mean? Ashwini Gujral, Mitesh Thakkar and Prakash Kaba with us for the Friday morning trades. Ashwini, good morning. Your thoughts on markets? Yesterday you were making a point that the market breadth was not good and the market has reversed from key levels. You reckon it's a market where you want to now take short positions?
Well, good morning. Yesterday we made money on the shorts as well as the longs. I think that should remain the case. I don't see there is the big triggers which will trigger a sharp move. And that is something people should understand and not get positioned for that large move. This is a year of small moves most of the time. Yes, as and when a big trigger comes, we are positioned for a big move. But if that does not come, we could trade this way for next many days. So more individual stock market, I don't think there is a great play on the index. But slowly we are kind of, drifting down. It's not good enough to short on the index.
Okay, not good enough to short on the index. Ashwini, hi, good morning. Before I go to the other guests, I have to ask you about ICICI Bank. I remember we had this discussion the last time where you said that as and when there is a succession plan put in place for Chanda Kochar, the stock could see a huge relief rally. In fact, this morning there are articles suggesting that plan has been drafted. For a long-term investor, is it still worth a buy?
Well, it's clear that you'll have to drag her out. I mean, she doesn't get the message. But obviously now that it's in the works, chances are it'll gap up and probably have a strong day today. So that way Bank Nifty is likely to get support because this is the first indication that it's going to happen. So if we get a nice gap, yesterday I think it closed at closer to the lows. So probably try and see if we get something on ICICI Bank.
Okay, we'll watch out for that stock. Let's see how that does. Mitesh, good morning. So absolutely range bound this market. Are you trading the indices, either the Nifty or the Bank Nifty?
Good morning, Surbi. I think yesterday, we had a very important levels being tested both on the Nifty and the Bank Nifty. So both the indices kind of tested the congestion zone of intraday moving averages, managed to hold above them. So in that sense, I think the trade will happen if we start breaking below yesterday's low or get closing below yesterday's low or get closer to yesterday's high. I'll be slightly more biased on the negative side given the fact that the short-term setup is slightly weak. But I think a good confirmation will happen if we start trading below 10,775 on the Nifty. That should give an immediate decline of about 80 to 100 points. Similarly, if the Bank Nifty breaks and sustains below 26,500, I think 26,200, 26,150 should be the minimum it could test with possibilities of further decline.
Okay, before I get Prakash, Ashwini, just a word on pharma. Your thoughts here?
See, pharma is the only space where you can keep buying the declines and the market takes you higher. So still the first move is continuing and people are, half of them want to invest in pharma, the other half want to stay safe. So that way I think it's finding a lot of buying. So I still have a couple of pharma stocks even today. So my sense is it will continue to outperform the market on the upside.
All right. Well, let's get Mitesh Thakkar, let's get Prakash Gaba into this discussion as well. Prakash, hi, good morning. What's the sense you're getting about the index itself? It's largely been range bound around this 10,800 level. Do you think it could break either way over the next 1 week or so? And what about today?
Good morning. Basically, when I look at the structure, it tells me the move that we have seen from the recent low of 10,400 to the recent high of 10,800, 900 zones is more of a reactive up move, which basically means it's gone up, but gone up to come down. I see more weakness here than strength. It's basically, when you look at the larger time frame, it's sideways, but the bias is on the downside. So it's exactly the same case with Bank Nifty as well. I would say that Bank Nifty also is looking weak. I don't see strength is there. In fact, I would say Nifty, when it climbs up 50, 60 points on the upside, you can give. I don't think it's going beyond that. Depends where it opens, but the downside is open. The lower levels that we intend to see on Nifty in the days to come, perhaps is 10,710. That's a crucial level to watch. And the Bank Nifty actually is more weak than Nifty. So I think the bias is down.
Okay. Ashwini, let's get down to stocks. I was looking at your list. So Tata Global actually was interesting yesterday. It was seeing quite a bit of buying. What levels would you track now?
See, again, consumer stocks, Jubilant, etc., everything is moving higher. So this was the one which had corrected because of results. So my sense is it will get back to 300, 310 fairly soon. So again, one of the stocks where you should buy on declines. This is a buy with a stop of 273, target of 288. Lupin is a buy with a stop of 890, target of 925. Sun Pharma is a buy with a stop of 554, target of 580. India Cement is a sell with a stop of 118, target of 110. And Engineers India is a sell with a stop of 136, target of 124.
Okay, Mitesh, good morning. What are your stocks?
I do have a mix of buy and sells. CET is a sell where the intraday charts are weak, so keep a stop at 1369, look for targets around 1305. M&M is a conditional buy. In fact, the stock is doing a range of about 925, 926 to roughly about 900 for the last few days. So on a breakout above 927, buy with a very tight stop at 918 and look for targets of 955. A sell on Tech Mahindra, where again the intraday charts are weak. Keep a stop at 707, look for declines to about 680 zones. Two more buy calls. Wokhart, I think, along with other pharma stocks, we have seen a lot of positive developments on the charts over here. The indicator setup has turned quite positive. So around 725, 720 would be a good range to buy. Keep a stop at 702 and look for targets of 775. And finally, a buy on Arvind Limited with a stop at about 404. Look for targets of 435.
Okay, and Prakash, what about you? Anyone and everyone seems to be buying Sun Pharma these days. You continue to have that on your list. And what else are you looking at?
I have two buys and two sell. I'll start with Sun Pharma. Certainly, it looked like a good buy. I've seen a good up move yesterday as well. I think Sun Pharma can climb to around 570 zones. I would have a stop below 556 and trade long here. I also have Granules India. That looks good. Good move that we have seen in the later part of the trading session. Possible target on the upside is on the 91, 92 zones. I'll be happy with 91 as well. Stop below 86. Two shorting ideas. CET looks weak. More of an exhaustion pattern here. Can see a slide to around 1300 zones. Stop about 1351. And finally, Max Financial. That looks weak as well. Possible target on the downside in the vicinity of 468. Stop about 480.
Okay, Ashwani, three stocks at or close to lifetime highs. Reliance, Bajaj Finance and also Jubilant Foodworks.
Well, yeah, the all-time highs, and investors can stay invested, etc. But they all of these stocks had big days yesterday. So Reliance, particularly, it's been 7-8 sessions up in a row. So to buy them today in the morning may not be the brightest of ideas, but if you get any sort of declines like we had yesterday, then these are the top 2 or 3 stocks that you should try to get in, because all-time highs means that there isn't enough selling to take these stocks lower. A couple of days and Bajaj Finance pops back up. So Tata Elxsi is another one. Yesterday, IT was down 200, 250, the index, and this closed at the high point of the day. So I'm interested in Tata Elxsi and maybe something like a Hindustan Unilever, which has come down for a couple of days. So as a trader, you want things where things have been down for a couple of days.
Okay. All right, gentlemen. Thank you very much for your stock picks and, of course, the market call. We'll come back closer to market opening. Right now, let's quickly get a corporate conversation going. V-Mart is a stock that's been in focus. So let's get chatting, find out how the year has opened out for the company. We have Lalit Agarwal, CMD of V-Mart Retail, now with us. Thanks, Mr. Agarwal, for joining in. Now, when we spoke earlier, you had indicated that maybe 8 to 10% same-store sales growth is possible. Are you on track with your existing stores with that number? And what about new store rollouts this year?
Good morning. And internally we do believe that the potentiality which is left out in the market, we have a ability to grow to that level, at least 8 to 10%. But on that ground, even the first quarter has not been too great. Looking at the very strong first quarter last year, so the base has been very good. So now, but I'm able to see the demand rising. And then there will be good effect, and we will be concentrating more on the same store sales growth and also opening new stores. We have opened 31 new stores in the last year. We would want to open at least that much or more than that. So around 35 is what we are planning to open this year.
Okay, so 35 new stores is what you're planning to open. I wanted a little more details on what your e-commerce strategy would be, because I was reading somewhere that you're looking at an omni-channel strategy, not just physical shops, but also looking to increase your online presence. Can you tell us a little more about that?
So we internally we believe at the corporate level and the board has asked us to look into it, that digitalization is something that is going to remain and grow, and we need to be prepared and be there in the market wherein our customer can get the convenience. So we are trying to develop something internally right now. It's just a strategic move, and then we are building the capability in terms of the processes in the organization, because online is a different game. We are an offline player. Yes, the products are similar, but the methodology used in online versus offline will be different. So that's something that we need to learn and understand, and also integrate some technology stuff internally. So we are right now on the process of building it. It will take some time, but yes, we want to do something where the offline and the online customer base can come together, and the people who are there in our particular area of geography where we operate, those people who live little farther away from our store can also access that whenever they need, because the transportation in India is very, very weak. So at times the lady of the house or the young guy of the house may not be able to travel. So it adds on to the convenience, and at times, because ours is a fast fashion and we keep replacing our fashion very, very regularly. So at times people can also block those inventory.
Sure.
So something on the line. Let's see what comes up.
Okay, we'll wait to hear more about that. So these 35 new stores, will you stick to your traditional markets, which is the tier 2, tier 3 cities, or at some point in time, are you looking to expand into metros as well?
No, metro is not on the card, and there is no focus towards metro. We want to explore the small town, and wherever we've got the success, we want to do that. We are getting into newer geographies also. So we want to just be there where we are and then explore more and get deeper also. So we have tried those tier 4 towns, which have been also so successful in the operations. We are experimenting that. So we want that to wait for some more time to expand more on that side.
Mr. Agarwal, I'm just going to go back to your first answer, where you gave us the store rollout plan for this year, 35 stores. So, A, how are you funding it? I mean, is there any need to raise money this year? And you mentioned that the year is not off to a very good start, though you will maintain the 8 to 10% guidance. So, Q1 looking softer than Q1 of last year? Is that the case?
Yeah, so I don't want to say that it is softer, but the growth that I'm anticipating, we are not able to visualize those growth in the first quarter, because, in India, the kind of town we operate, these towns are more aligned, the consumption is more aligned towards marriages. In this particular year, because there's a Adhik Maas which comes in, and in those months, the marriages are not there. So normally, the marriage is a big driver for consumption in our territory. So we have seen a little downfall for that, but still we would have some growth.
Okay, all right.
What about the CapEx plan, just on the 35 stores? Any fundraising this year?
No, I think the kind of profitability the company is generating and the efficiency in the working capital that we are doing, we will be able to have a good backup of our funds that to support the growth plan internally. So we have some limits on the bank which we used in between during the year, but overall we don't think we would need any more capital.
Oh, Okay, we will leave it at that. Thank you so much for joining us. That's the word coming in from V-Mart Retail. It's been a huge multi-bagger in the past. In fact, I think in the last 2 or 3 months, yes, there it is. It's up almost about 30-odd%. We'll take a break. Nishal Maheshwari of Edelweiss is our fundamental guest. He'll join in on the other side with some long-term stock bets.